What's up, everybody? Nate here. So there has been talks of a global recession from just about every single expert and investor you can think of. All of this comes after our entire country has been reeling from the pandemic for the last 2 years. And remember, it wasn't even that long ago from the last United States recession. But because of things like massive inflation and the Russia-Ukraine war and supply chain issues, some experts are saying that the United States and the rest of the world is going to fall into a recession by the end of this year. In fact, Goldman Sachs just said the chance the United States is going to enter a recession either this year or next year is around 35%. So you would think with all of these problems in the United States, from inflation to interest rates rising and markets crashing, the United States is definitely destined for a recession. But hold on just a minute. There is a chance, according to Goldman Sachs, that the US and the rest of the world could avoid a recession this year and next year. And today we're going to be talking about all of this and more and discuss exactly why Goldman Sachs thinks that the US and the rest of the world could actually avoid a recession in 2022 and beyond. But before I get into all of that, do me a quick favor and hit smash or destroy that thumbs up button below and ring that notification bell too. Both of those two things are completely free and they help to show me that you like this video and that you want to see even more just like it. All right, there are a few different reasons why Goldman Sachs thinks a recession is avoidable. And the first is a normalization of our economy and a return to a surplus of goods and services. Obviously, when the pandemic struck, things were closed for a very long time in both 2020 and even parts of 2021. That meant that businesses got way behind, and even when things started to open up again, they were even further behind than they were before. So that immediately created some supply and demand issues because you had demand starting to go up because supply was getting way too low. And it wasn't just in the United States, it was across the world. Places were shut down for a long time, and what that did was create supply disruptions. Now your entire supply chain is all thrown off whack. Not only that, but in the United States, we had stimulus, and we had the federal government pausing mandatory payments for things like federal student loans and mortgages. That meant that Americans were getting a lot of money, and even though it was in the short term, they went out and spent this cash. They bought things that they needed. They bought things that they wanted, and regardless of what they purchased, America basically ran out. Now in 2022 though, we're starting to see an improvement in supply chains as the pandemic is starting to take a back seat. I mean, obviously the pandemic is still around, but for the most part, Americans are starting to get back to business as usual, and businesses are starting to do the same. This leads into the second thing Goldman Sachs talks about, a workforce that is starting to improve. Like I said, people were out of work in 2020 and in 2021. Not only did that mean that products couldn't get made, but it also meant that people weren't going to get paid. That's a big issue, and it's what led the federal government to print trillions of dollars in stimulus. But now in 2022, people are starting to get back into the office. They're starting to work normal schedules again. Unemployment rate in the United States has been crazy over the last 2 years, but now it's starting to stabilize, and it's getting to a point to what the Federal Reserve calls maximum employment. You see, the Federal Reserve wants as many people in the United States to work. This eventually cools off wages, and it allows everybody to make a consistent income. With everybody working, the idea is everybody will have money, and then wages will increase at a predictable rate every single year, so inflation can stay pretty much stable. Not only that, but your supply chain issues don't really happen because everybody is employed, so anything that's going to happen is outside of the United States. But you and I both know that the entire United States is not going to work. We are never going to achieve maximum employment in the United States, so what the Federal Reserve prefers is a little bit of unemployment in our country. This way, not everybody has money, so not everybody can spend money, and the people that do have money pretty much make up the difference. Obviously, you can't have a massive unemployment rate because the people who are employed won't be able to make up that difference fast enough, but overall, a few people unemployed in the Federal Reserve's eyes is okay. But something else has happened over the last few years, the Great Resignation. Millions of Americans have left their jobs for better pay, better benefits, and better working culture. But they have ran into issues because while a lot of Americans are searching for their dream job, they're kind of running out of time because of inflation. Inflation is just when the monetary monetary supply of a country starts to go up. So the United States federal government prints a lot more money, and what that means is that more people have access to it. Demand starts to go up, and that's what caused a lot of our supply chain issues a couple years ago. But because everybody has so much more money, prices need to go up too, because businesses take on extra costs. They now have to pay more for their goods because they're getting more, and they also have to create more, which means hiring more people and building more factories. As the cost of things goes up though, Americans are draining their savings accounts, and they're not going to be able to continue to not have a job. They're going to have to take what they can get. Unemployment is improving, and the number of Americans working is also improving, so we're starting to see some stabilization there. And then finally, Americans' household spending is shifting. The general consensus from Americans is that they are doing pretty well. Americans in 2021 and 2022 got a huge raise, a big enough raise for them to be pretty happy with. That, combined with the pandemic sort of disappearing, has meant that consumer sentiment is going up in the United States. Household spending is shifting. Americans want to get back out and take vacations and go to concerts and do things that they want to do again. They have all of that pent-up demand from not being able to do things in 2020 and in 2021, so this summer is about to be crazy. American spending money is really good for our economy, and it keeps us out of a recession because American spending accounts for 70% of our economic growth. If Americans aren't spending, then our economy can't exactly grow because businesses can't get profits, and then they can't pay their people. It's like a big circle, and everybody just kind of cycles money around until the Federal Reserve decides to print more. We're also starting to see credit card debt rise in the United States. So what all of this means is that Americans are spending money despite supply chain issues, despite inflation, and despite prices going way up. Now, of course, Americans are starting to spend more money, but the cost of things has also gone up in 2022. Like the last consumer price index in the United States showed that inflation went up by around 8.5%. And many experts and investors are expecting it to continue to rise in 2022. So Americans have to spend a lot more for all of the same goods and services. This is because the buying power of their money is getting drained because of inflation. However, there's also a big psychological issue that's happening in the United States. Americans had a lot of extra money in 2021 and in 2020. I mean, you got to think about it. The stock market boomed in 2021. We saw record highs because Americans had a lot of money to give. Americans are still giving a lot of money to the stock market in 2022. And while the returns they're seeing this year are a little lower, Americans had big returns last year. They saved a lot of that money, and now they're ready to spend it. Not only that, but a lot of Americans have a lifestyle to keep up. Because there was so much money printing in 2020 and in 2021, Americans spent a lot of money, but with the economy starting to tighten this year, it's harder for people to spend as much money. So they're starting to put a lot of that money on their credit cards. And while I think this is bad for the future of our economy, it also means that a recession is not around the corner. Now, with all of that being said, is the United States actually going to avoid a recession in 2022? Well, Goldman Sachs believes that a recession in the near term is very unlikely, mainly because the United States economy has a lot of momentum right now. The biggest thing on Goldman Sachs' mind is the Federal Reserve starting to raise its benchmark interest rates. They dropped them down to 0% in 2020 through 2021 because they wanted Americans to go out and spend. Spending is what fuels our economy. But as of March 2022, they're starting to raise them, and immediately they raised their benchmark interest rates by around 0.25%. They want to raise interest rates 6 more times in 2022, 3 more times in 2023, and once in 2024. This is all in an attempt to lower inflation. They want to eliminate that demand from our economy so that there's not as much money circulating around. If people don't have as much money to spend, then inflation can't possibly go up, and the price of things will eventually start cooling off. We don't know in the future, though, how aggressive they're going to get with inflation. So if they get super aggressive aggressive and raise rates super fast, then that could cause a recession. They want to eliminate a lot of the demand in our economy, but they don't want to eliminate all of the demand. They still want Americans to go out and spend their money. They just want to make it a lot harder to do so. It's worth noting here too that the 10-year Treasury yield actually hit an over 3-year high by mid-April 2022. With the Treasury yield essentially going up, this shows that there is a lot lower of a demand for Treasury bonds in the United States. Investors are now putting their money into other things like corporate bonds, individual stocks, ETFs, and alternative investments like real estate and commodities. Now, this could mean one of two things or possibly both. For one, it could mean that investors believe inflation is going to continue to rise in the United States, and they're not going to get that high of a return from the US government because the Fed is raising its interest rates. So they're taking their money and they're putting it into other things so that they can compound and multiply way faster than they could with Treasury bonds. But it also could mean that investors have a lot of confidence that the stock market and our economy is going to do well. They're taking on a much riskier investment with corporate bonds and individual stocks. By putting their money into those assets, they're showing the American consumer that they're willing to take on that risk because they think that everything is going to work out. Furthermore, I do agree with Goldman Sachs when they say that our supply chain issues are eventually going to subside sooner rather than later. I mean, the only reason that we had those massive supply chain issues is because of the pandemic. Now that Americans are able to get back to work and the pandemic is mostly behind us, then we should be able to meet that demand, and with interest rates starting to go up, Americans aren't going to be able to buy as much. Now, obviously, there is still a concern with the Russia-Ukraine war. That is creating a lot of uncertainty for the stock market and our economy right now. The supply chains from that event are getting squeezed even more, which means less things can get to the United States, which means our businesses are unable to make more even though they want to and have the staff to do so. I think, though, the world is going to adapt to this. Obviously, the Russia-Ukraine war is going to go on for a long time. We're not really sure how long it's actually going to last for. So the United States and its allies are going to have to adapt. They're going to have to find those resources in other places in the world, and I think those countries are willing to step up. Russia holds a lot of resources like oil and precious metals and wheat, but they're not the only producers of those goods in the world, and other countries have been trying to get into those games, but they haven't been able to beat the global superpower of Russia. Now, if we have other countries eventually filled those voids, then we won't need to rely so much on Russia. That is going to take a while, though. It's not just a switch that you can immediately turn on. But like I said, if supply can somehow start to rise in the United States and demand can somehow fall, eventually they're going to reach an equilibrium, which means inflation that is being caused by supply chain issues is going to go away. Then, of course, we have inflation from money printing. Now, we're always going to have inflation from money printing because the Federal Reserve can never truly turn the money printer off. The United States federal government needs money in order to fund bills and pay off its debt. The only way that it can do that is by printing more money, so inflation is going to continue to go up, and the Federal Reserve knows this. They just want to get inflation down to a target level of around 1 to 3%. If all of what I said happens very slowly and over time, then we're most likely not going to see a recession in the United States or across the world. This is what Goldman Sachs is hoping for. We might start to see some things slow down, but it's most likely not going to be enough to cause an outright recession. And that is the first positive news that we have heard in a while. But now I want to hear from you on this issue. What do you think about Goldman Sachs saying that we can essentially avoid a recession in 2022? Do you think a recession is inevitable in the United States and across the world, or do you think that our GDP and economic momentum will basically allow us to skip over any possible recession threats? Whatever your thoughts are, leave a comment below before you go. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you want to stay up to date with all of the top business and financial news from around the country, our team puts together a free daily newsletter, and you can subscribe to it by clicking the link in this corner right here. And if you want to stay up to date with me and everything else happening in the business and financial world, I'm putting out updates 7 days a week over here on this channel, and I've actually got another one ready for you right here, so be sure to check that out before you go. That is it for me, everybody. Be kind out there, and I'll see you all in the next one.